Well, welcome back, everybody. We got another episode of Bound by Banking, and today we are joined by a very special guest, Nicky Senyard. Well, thank you for joining us. How are you doing today?
Oh, doing brilliantly. Spring is here, so that's always a good sign.
It is. Spring is here. I love the trees, the grass blooming, although allergies and pollen, not so much. So it's good and bad with it. So pros and cons. So,
Yep.
well, very cool. Well, I'm excited to be talking with you today. I've got some really good questions for us. But before we hop in, I would love to just kind of give you a minute or two to let you introduce yourself to the people watching.
Great. Thank you very much for the opportunity, Ryan. It's fabulous to be here. Hi, everybody. My name is Nicky Senyard, and I'm CEO of Fintel Connect. Fintel Connect is a bit of a unique business in our sphere of banking technology and growth and all that sort of thing. Our mandate is to help banks grow. And to link them together with customers that are ideal set for what they've been set up to do. So Fintel Connect is actually the only affiliate network technology platform in the world that focuses just on finance. Finance is a beast all of itself, as everybody that's probably listening to this knows. And we decided sort of like about 5 or 6 years ago that it deserves its own destination for partnership and acquisition growth through publishers, through third parties. So that's our existence. So that's what we do. We serve probably about 100 different products now, and we have a group of publishers, affiliates we call them, about 7,000, 8,000 strong. So we've got a really good little marketplace going between financial product, both in Canada and in the US, and publishers that range from everywhere of the nerd wallets and the Forbes and the bank rates right down to TikTokers and influencers. So we cover the gambit of them.
That's awesome. I knew
That's
y'all
us.
worked with quite a few publishers. I didn't realize it was that many, 7 or 8,000. That's awesome.
Yeah, and they vary, right? There's sort of
Yep.
like the big guys that everybody knows about, the
Mhm.
up and coming guys, which we call sort of like a tier 2, and then the third tiers, which are the sort of like the micro publishers, we like to call them, that are getting an audience together, but their audience is so quality and so well engaged.
Yes. And I think that's the thing with some of those kind of, I hate to call them bottom tiers because they're not, but the audience is very engaged. They follow these people to a T, and
Absolutely.
if they say
And
something,
they're engaging with the
yep.
content, and
Hmm.
it's more a sort of like in the olden days, we would have called them a forum, but it's
Yep.
sort of like that forum type atmosphere, which is super cool.
Yeah. Quality versus quantity. There's certainly both.
There's a balance
Yep.
everywhere, right? There's a sort of like, there's a pro and a con for each of them. So yeah.
Absolutely. Absolutely. So, well, very cool. Well, thank you for introducing yourself. I'm excited. So I've got some questions here for you. So
Sure.
we'll go ahead and hop right in if you're ready.
Absolutely. Ready to be in the hot seat.
Awesome. Very good. So, all right. So I know you guys work with quite a variety of different customers and clients, and ranging from some major banks like RBC and BMO, all the way down to community banks and credit
Yep.
unions. So, do you feel like some of these smaller institutions still have a shot at competing digitally, or do you feel like that gap is widening?
Oh, absolutely. They're in the game. They're in the
Are they?
hunt. Yeah.
Love
The
it.
smaller guys can be in the hunt if they choose for it to be. I think what happens is, as we were talking about before, maybe this will be the theme of the conversation. Everything
Yeah.
has a pro and everything has a con. The big guys have brand awareness. They put a lot of marketing into brand, absolutely. But the smaller guys actually have the ability to be nimble on product and also on incentives and also on budget allocations and things like that, because they have absolute rigor. This community bank versus a big enterprise bank, everybody still has the rigor because of the banking licenses, but sometimes a community bank has the more flexibility because they can move faster. They don't have to have the
Yep.
the levels of control that are in place with some of the bigger guys, because they're a much more nimble teams. So I think what in this situation where in the digital acquisition game and who wins, the person or company or product that wins is the one that is closest to their audience.
Yes.
and understanding their audience. So, and understanding where the audience are and understanding what the audience are looking for. And that can be everything. You know, the interesting thing for us is I've done some really good anecdotal analysis into what works in the affiliate channel, what makes the affiliate channel work. And the first cornerstone of working in the affiliate partnership world is product. So if the product doesn't work, it's not going to work. But the product working has to work for your organic, it has to work for your paid, it has to work for your emailing. Guess what? It has to work for publishers as well.
Yeah.
Funnily enough. So when the product is ideal for that target audience, and the unit economics are all so in line with what they need to be contextually, then they can win. That was a very long description of, yeah, they're in the game.
No, and that's a very good point of understanding what your audience truly wants. I was talking with somebody probably a month or two ago on this, and they were talking about how you have to take off that that banker hat of like what's best and put on that consumer hat and think in the eyes of what they see and how they feel and what they truly want.
And it's also, I always talk about two things. I talk about content. So what is the product? But then the context is also important. So content and context. Context talks about what else they're seeing. This is the comparison world. But the content is the purity of the product or the purity of the offer or the purity of whatever else. But it's always got to be viewed through a context lens.
Mm-hmm. Yeah. No, and truly understanding what they're looking for, what they want, and making sure that you can hit that mark. And even once you go live with the product, A/B test it, try new things. There's that moment of never stop learning, I think is truly how you
and never stop evolving and listening within the realms, because I think it's always again, balance, right? So the audience or your consumers may want one product, but it doesn't actually suit the infrastructure or the regulations, or, like there could be some barrier that is beyond your control in all of this. So it's like pivot to a new group, because if that ain't going to work and you can't change it, look for a new group.
Yes. Very good. That's a great answer. I love it. So, okay, I got a next question here for you. We got a few, so I hope you're ready for them. So, cool. So obviously Fintel Connect uses some like AI powered content monitoring to help brands stay compliant. So how do you see AI reshaping how banks find and connect with new consumers and customers over the next few years?
So I think this is a very hot topic.
It is.
Very hot topic. And I think that it's still evolving. Let's put it into context. It's still evolving. We now have the LLMs or the AI interfaces. Let's call Claude, Perplexity, Chat, all of these things as AI interfaces. They have all got their own secret sauce about how they're crunching the data, but basically they're massive, large learning models, right? That's what, let's put it down to what it really is. They're large learning models. So what's happening is the way that those large learning models are crunching data is still evolving, right? They're learning. That's what they do. But understand the process of acquiring a customer and working with a customer from a bank's perspective is still what it is. You still have to find someone. They still have to go through filling out your forms, doing a KYC, basically, and then interacting with the product. So let's not get too complicated about all of this. And what these LLMs are doing is, from my perspective, very simply, simplifying it down, is that they're breaking Google's hold on accessing that traffic from an organic perspective. Right? So basically what you as the initiator of a campaign now have different options. So if I always like to try to say, when I talk to people, I say, I break marketing into two buckets: brand marketing and acquisition marketing. And in those buckets, each group or each bank or each group that's trying to acquire new customers have basically the same 7 tactics: email marketing, organic search, paid search, organic search, paid search, advertising, it's affiliate marketing. It's the same sort of group. But what LLMs do is in the organic search area and the paid search area, they're giving us more alternatives.
Yep.
Right? But understand the LLMs still have to find you. So if you're not rating in Google, then probably are they going to find you? How do they find you? So there's sort of like a whole lot of things around with that way. So this is a very long answer to your question. I'm so sorry. I'm
No,
hoping
you're
this
good.
is
It's
vaguely
good.
interesting as we're going along.
I love
So
it.
what happens is see it as another channel.
Yep.
Understand each channel has its own rules of engagement, which you guys absolutely know. So make sure that you're playing by the rules of engagement so that you can be found. And then it's again a exercise of tweaking. I don't think all budgets should go into one area anyway, because I think you should always have an equalized strategy because it's going to touch different people. Now, is the old adage that you need to touch somebody 7 times still real? I don't know.
Yeah. Yeah.
But we know that it's a lot because they've got a
Yes.
lot of stuff coming at them along the way. So I actually see the LLM initiative or these new interfaces initiatives as a big opportunity for anybody who's in the digital acquisition world. So I don't see it as carving out. I don't think the rules change. I just think we've got new platforms by which to do it through. And we need to understand how those platforms need to be engaged with. Again, a very long answer, but I hope it was all into context of the whole
No.
thing, because I get this conversation a lot.
Yeah. No, and obviously AI is today's hot topic. Everybody's talking about it. Everybody's got their own thoughts and opinions, and obviously LLMs are the new next big thing. And to your point, yes, there are still a lot of those traditional digital channels like email and search and social and everything like that. And LLM, in my opinion, takes all of that, combines it, and kind of gives you an overall online score, digital score, I guess, if you will. Like, how likely are these LLMs to recommend you?
Find you.
Yeah, are they able to find you? Are they going to recommend you? Is the person who's doing this search query the right person? Are you the right fit for them as well, based
And
on other criteria?
that's it. And the other thing is also, is your audience using
Mm-hmm.
chat? Is your
Mm-hmm.
audience using Claude? Is your audience using Perplexity? Like, what is your audience using to
Yeah.
find out what are they doing to find out how they work in their world? So I
Yeah.
think that I just think it is, I'm trying to demystify it, which is exactly what you're saying, understanding it's just a new channel and
Mhm.
understanding how that channel needs to work and how you can leverage it in your business to
Exactly.
accomplish your goals.
Yeah.
So yeah, absolutely.
Exactly. That's what it's all about. Innovation's never going to stop, and so it's figuring
Yep.
out, okay, how do we figure this innovation out? How do we capitalize? How do we market on it? And then how do we grow it? And so, we did the same thing with social media back in mid 2000s when Facebook and Instagram were first
That's
becoming
it.
big, and email marketing and everything else. So it's we've been through this stage many times. It's just a new
It's
shiny
just a
tool.
learning. It's just a new learning.
Yep,
Absolutely.
absolutely. So very cool. Okay, so next question here for you. So obviously you have built some pretty big companies. Well, two, I think, the last few years in this space. So you've seen the industry evolve dramatically, and so you've been backed by some very prominent voices in the community of banking. So, what is one thing that you wish more financial institutions understood about how to grow in this digital age?
I think the thing for me is that I think every financial institution needs to work out where they win,
Yeah.
right? And I think where you win in a land-based environment with your community outreach, with your branches, with a whole range of different things that go on is one way. And I think I would implore each community bank out there to understand that they can win in a digital framework.
Hmm.
I don't think it has to be one or the other. I think each have different rules of engagement that you have to learn. But I really feel like that you have to play your own game,
Yeah.
right? Just because Cap One or Wells Fargo or JP Morgan do something, it doesn't mean that you can't do it in your own style and your own way to match the people that you want to engage with. And I think it all backs into what is unit economically viable. I think what happens is that some people think, well, I can't afford to do that, so I won't. And in some cases, maybe your unit economics, when we're talking about quality versus volume, works out better for you.
Yeah.
So do you know what I mean? And, like if you're talking about working in our world, which is through third-party publishers or influencers, maybe you have local influencers that you could work with. Like you would have traditionally worked with the radio station or with television or the local paper. Maybe you find local influencers to work with. So I think just because the big guys do it in a certain way doesn't direct what you can do within your own ambit, within your own unit economics, within your own flavor of what you want your financial institution to be. So I just think you see what everybody else does and then do it yourself the way you want to do it. So I just think you need to be in it. I don't want you guys to become extinct. I need you to be there because you play a really good role in what goes on in terms of your relationships with the community and all of those sorts of things. So I think my biggest mandate is don't be intimidated just because you haven't done it before. Everybody has to learn and make sure you do it in your own style, in your own framework, in your own way.
Yeah. And I think that's a very good point because, I meet with credit unions, banks all across the nation who, even still hard to believe in 2026, have never really done much digital, if any at all. And so like it's still kind of uncharted territory for them. And so, I always have to tell them, like, you've got to get started somewhere. Let's start, Rome wasn't built in a day. Let's take that first step. Let's start running some paid ads. Let's generate some traffic to the website. Let's start opening up some new deposit accounts or more mortgage lending or whatever it may be. But you've got to start somewhere. And then secondly, part of that branding piece, you've got to add that personality. Who are you as a unique? What helps you stand apart from the bank across the street? What makes you different? And so adding that unique personality to it as well, like you were saying with some of these Cap Ones and Wells Fargo's, like that's how you stand out. That's why much people are much more willing to go work with and bank with these local communities rather than, the big three-headed monster in the room, the big giant. So
that's exactly right. And I think what the deal is you have to start. Nobody likes starting the idea of getting fit.
Yeah.
But you just have to start. It starts with the first workout. It starts with the first campaign. It starts with the making sure that, and the great thing that I think a lot of community banks or credit unions may not realize or do realize, but it's to their advantage, is that if you can set up good infrastructure now, good data analytics, good clarity on A/B testing, good understanding of your unit economics, what is your CAC, what is your LTV, cost per acquisition, all of those things, you can learn from what everybody else has done and do it cleaner and quicker and more within your personality now. So, like it's never too late to start. Maybe that's the thing.
No, absolutely. And that's something that I try to tell a lot of these banks. I'm like, look, we've worked with over 100 institutions in the last 10 years. So we know what works, we know what doesn't work. Like, while to you, I get you're a little nervous, you're a little scared, and that's fully understandable. Like, we know what we're doing. I'm sure you have the same conversations with the people you talk with. Like, this is second nature to us sort of mentality. So but
just understand you've got good leadership.
Yeah.
With you guys and with us, we actually know what works and we'll tell you. Because both of our businesses are going to be around for a very long time. So for us, it's more about the quality of the leadership rather than the size of the contract as well.
Absolutely. So, okay, last question here for you. So we'll kind of round it up. And this actually kind of leads partly into what we were just talking about. So I understand you guys there at Fintel Connector can sometimes be a little bit picky about or selective about who you work with. And you want to make sure that the banks and credit unions that you start a campaign with have done some digital marketing or at least doing some digital marketing. And so I'm curious, what's the thought and how crucial is it to have that digital background when working with you guys?
So understand that affiliate marketing, what we do, or partnership marketing through third parties, is not for everybody, right? The reason being is that we work on a results basis, but the results basis is not a click or not an impression. it's a real live, active, approved customer. So our cost per acquisition moves down to a customer that's deposited $1,000. That's when the CPA has been triggered, or when a customer is approved for a mortgage. So this is we're right down the other end. We're right down the end of the funnel. So everybody will say, I want more of that. I want to pay for the real customer that I'm getting. Cool, not a problem. But like everything, there is a backstory. And the backstory is that your product as the banker or as the credit union holder of acquisition needs to convert. It needs to actually allow a customer to come through and convert. We call that, basically the conversion ratio. So if you haven't done your own digital marketing, if you haven't done your own properties, if you haven't actually gone there to see what your conversion ratio is, then all of these nerd wallets and Credit Karmas and bank rates and Forbes are going to be a little cautious about working with you.
Yep.
Because you don't know, you haven't invested your own dollars in stuff like what you guys do at Bankbound to actually see what your conversion metrics look like or how holy your funnel is. Because what these guys are doing is that they're our database of publishers, to the most part, are excellent marketers. Their job is to get you the right traffic to that conversion point. What they have no control over is how holy your funnel is, how tight your KYC is, how interesting the product is. So this is why it's called partner marketing, because they have their job and you have your job. So part of your job is to make sure each of those things are right. And how do you do that? By investing in your own marketing.
Yep.
So for us, it's not the fact that they need to be doing the marketing, digital marketing. It is the fact that they've done it and know what it looks like and are helping contribute to the noise in the industry about what the brand looks like.
Yeah.
So it's sort of like, I always talk about affiliate marketing being 80% acquisition and 20% branding. The bank's opportunity is almost to do 80% branding and 20% acquisition.
Yeah.
So this is where the partnership comes into the whole thing. So when people say, well, like, why should I do any marketing because I'm paying these guys? And I say, well, it's a partnership. If you ain't got your house in order, then no one's going to want to come and buy it. So, and that's what the publishers are doing. And also the publishers are paid on the results. So you can absolutely do an ad spend with any of these publishers or affiliates that we're talking to on a media buy basis, but they're not responsible and they have no skin in the game on the outcome.
Yeah.
Right. So what you want to do is you want to make sure that your partners and these digital acquisition marketing people have skin in the game. And the way that you can demonstrate that you have skin in the game, and they can as well, is that you've invested in your own profile and your own acquisition channels. Does that make sense? So we're not so picky on it, but we just know what works, like you do.
Yeah, exactly. And I think that's truly what makes a good campaign, is knowing what works, knowing, okay, sometimes we're going to have to say no, and that's okay. And it's not that we don't want to work with you, but there are certain things that we have to go through. There's a process that we have to follow because we've been doing this for years and years. We know it works. There's a strategy behind it, and it's one of those things like, we're not opposed to going away from that strategy, but like, we know this works. And so having that brand awareness and that.
Yeah. And to the point, no, it's to the point is that what you want as the acquisition director or line of business owner in a credit union or bank or even in a fintech is you want a partner that is going to be honest with you.
Yeah.
And that a partner that is investing in the relationship for the long term, not for the commercial value of the contract only. So that's why we say no. It's because for us is that we would prefer not to take somebody's money if we don't think it's going to work.
Yeah.
So it's not the fact that we have a problem with the product or the bank or the what's the offer or whatever else. It's just the fact that we philosophically would like not to take people's money if we think it's going to fail.
Yeah.
So that's where the no's come from. But on the other end, if sometimes we will work with people on a we don't know basis.
Yeah.
We don't know if this is going to work. So please let us help you find out whether this is going to be the case or not, but understand, and we will tell you confidently, this is in the sweet spot or this is in the perimeter, but we're happy to give it a shot.
Yeah. No, and having that integrity and that kind of honest conversation time sometimes will, I think, goes a lot further than what people think. And I've met with people that I'm like, hey, you're wanting to start at step 3. We got to go get started at step 1, and we can't always help you at step 1. So go work with this partner, or go here. Let
That's
me refer you out
exactly
to
right.
somebody else. Like, you've got to be able to take step 1 and 2 before you can come work at step 3 and associate with you guys at step 4. And so,
That's
there are
exactly
certain
right.
things alongside of this that, okay, it is kind of a process that you have to go
And
through.
it's a continuum.
Hmm.
And sometimes you're at step 4 and then you have to go back to step 1. You
Yeah.
can still keep step 4 going, but you need to modify because the context of the industry has
Hmm.
changed. So,
Yeah.
there's lots of moving pieces in all of this.
There is. But no, I think having that integrity, when I was, was reading up on that, I was like, it always, those sort of things always sit right with me because I'm of the same mindset. Like, I'm not going to take your money and just for the sakes of taking your money. Like, I've
No,
told many people no before, and I'm okay with it because that's how I
yeah,
sleep good at night, and we've been able to grow just fine without it.
that's exactly right.
Well, very cool. Well, all right, Nikki. Well, I really appreciate you hopping on today. Thank you so much for all your insight and the wonderful thoughts and absolutely amazing conversation we had this morning. So I really appreciate it.
Oh, thank you so much for having me here, and look forward to working with you guys in the future.
Of course, of course. So have a good one.
Thanks.